All right, good morning, peoples. This is sort of a follow-up. A while back, I did a how to hedge NVIDIA, how to hedge Coney, how to hedge Misty, and I got a lot of interaction. But I wanted to update this, and then I wanted to kind of take it from the slant of utilizing, not everybody has options. So on one hand, if you want to protect, let's say I've got 10,000 shares of Misty, and I'm like, well, I'm concerned about what if BTC goes down and takes Misty down and Mister down? Well, there's a lot of different ways you can hedge that. If you have options capability, although the premiums are just too high to go out and um, buy puts, that way, you make a lot of money if they go down to offset your investment. So one of the areas that I really like that anybody can utilize is simply using leveraged ETFs. So that's what this is about. And I plan on showing you fund families, a lot of different leveraged ETF, who has them, and there'll be some that I miss and so forth, but I got a lot, and it's a lot of work to go find them all. So feel free in the comments to tell me something. And yeah, I know about a bunch that are coming, and where relevant, I mention those. So I'm talking about YieldMax, Defiance, Roundhill, SoFi, Granite, Curve, Rex, ProShares, to where you can have income funds, and a lot of those have protective, not all of them, right? So, all right, you jumped into a high yield ETF or multiple ones. Now what? Well, mostly it depends on your personal situation, right? This is similar to what I did in my first video. Are you still working and planning for retirement? Okay, you may be in a tax advantage, you may not be. That doesn't mean you don't want to hedge or protect. It just means you don't have a tax issue if it's in a Roth or an IRA or 401k. Not yet, right? What if you're working, but you want more income now to supplement your income? Well, that's where people come into these income funds. Look, I report on them and a lot of the YieldMax ones, and I have a plan to do some in some of the other funds. But so that puts me very close to the pros and cons and nuances of really how these work. I mean, I knew how they worked because I deployed what's known when you're not in the flex system as combo, right? I go long stock by buying a call and selling a put, same strike, same expiration. It's no different than what they call a synthetic. It is a perfect synthetic, right? You can go long, you can also go short. So here's my couple messages up front, because I get sometimes young people. You don't have to be young to have a small amount of money, but typically when you're young, you do a lot of the things that I did or anybody else, and you make mistakes. You go, oh my gosh, people are getting 100% return. I got 10,000 and I go throw it in Misty or NVIDIA or something, and it goes down 30 or 40%. And I'm like, oh. And then I went and I said, oh, these guys said that margin's even better, right? So now you're leveraged to the hilt. You can't even handle a 10% drawdown, right? Because leverage is like a credit card to a teenager that has no concept that you actually have to pay it. It's just a piece of plastic. Oh, that's cool. I'll buy the drinks. Drinks are on me. I'll get that. Right. And then all of a sudden the bill comes. Well, it's no different with margin. But look, I'm not talking to the guys out there who have a lot of money and a lot of experience. The idea of margin is a lot like real estate. Nobody asked you, although I got to remind you guys, did you guys know back in the roaring 20s era, we had a stock market crash. Do you know how real estate worked in those days? You had a mortgage, right? Do you know what the mortgage length was on average? Or I think all that exists, it was 5 years. You know what the down payment was? 50%. How many of you can afford a house where you have to put 50% down and you got to pay it all off in 5 years? Well, they weren't as expensive, but only the wealthy had it. So guess what? all the regular people started utilizing the stock market and gambling, right? And that drove the stock market up. So I don't necessarily do the correlation. I'm not telling you Chicken Little, the sky's falling, this is 1929. Could it happen? Sure. For me, it's going to be dangerous, right? But I do watch the technicals. And if we get a 20% pullback, I'm ready at any point in time and I protect. So this is more about for young, inexperienced investors. Be careful with margin. Also, please take caution when investing in any monies in any security. Your friend gave you a tip and you go all in, right? On some little, AMC or something, and it's flying. My friend got 3x, right? By the time you got in, it crashed, right? Roaring Kitty was laughing all the way to the bank at you. So anyway, that's where I'm going. I've been doing this for a long time, 40 plus years, right? So margin can be extremely helpful. Think of that in real estate. When real estate's booming, you're running around putting 5, 10% down, flipping houses and really making wealth. Where do you think people got a lot of money? But it works till it doesn't work, right? So markets can turn and go down just as easily as they can go up. So never assume what you experience now will always be the same going forward. I use that. Don't look in the rear view mirror and expect to see it down the road. Could it happen? Sure. All right. So I started this channel to help others, right? I saw these income things and I said, oh my gosh, I've been doing that, with combo options, and I love options and been doing them for 35 years. And I said, wow, I'm going to do some of these income funds, right? And then I watched how the fund managers execute. A lot of time they do a good job. Sometimes they don't. Anybody that doesn't understand capping. And then I'll tell you one that I sort of did a forensic accounting on Tesla. And that's like the case study and what can go wrong in an income fund. Okay. What's the number one thing you should consider when you're going to buy any income fund? Am I bullish on the underlying? Because guess what? It's an income fund to you, but to the market, it's a stock, right? Why do you think they call it the stock market? It's full of stocks and securities. And some go up, a lot go down, right? And sometimes they go up and then they shift to going down. So that's the reality. So I put this together to help people. When I first retired, because I played the commodity bull market in the 2000s, because I worked in high tech, I had another 10 years to work. And I said, what's going to happen? There was all this income doesn't matter, it's eyeballs, a little bit of the AI FOMO, although AI is real. But there is a lot of FOMO on that, and some of the players are going to sort out and so forth. But where I was going with that was what was going to happen after the dot-com bust. I had a guy that I stopped participating in his group. This was, internet wasn't that developed in the late 90s going into 2000. We had it, but it was pretty new, right? You remember the old mail out AOL disk and all that kind of stuff in the mid 90s. So the point was being, I got out of that trading room. It was like a New York trading room, and they were recommended. Everything was flying. And the guy said, when the NASDAQ was at 5,000, it's going to crash and go down to 1,500. And I'm like, this guy's an idiot. I work in high tech. No way. Well, what proceeded to happen over the next 18 months? It's exactly what happened. So I was struggling in mid 2001 saying, hey, all my stock options are down. I had all this money and working in tech and how am I going to recover? And I sort of figured out the commodity cycle and I watched and learned on cycles. So all I'm saying to you is those things work. All right. So it doesn't matter about me, but when you follow somebody and you listen to somebody, make sure they at least have some experience. I'll say sometimes, well, do I want to follow that 20-year-old, right? I'm not, hitting on young people. I give an example out down here. I started putting my channel together. I was a month in and I started looking at all these analytics and numbers, which I'm good at anyhow. And what do I need to do? And I came across this young guy's YouTube channel. He's 25 years old. He told a story when he was 16, 15. He was bored in school, kind of a smart kid, but socially a misfit. And he started putting things together, and he ended up doing a small little, game chat or something. And within 2 years, he was making more money than both his parents together. So he got really good, just focused on that. He ended up with 9 channels by the time he was 22. One of them was a million, one or two were million subscribers. So the guy was just blowing it open. I mean, just killing it. Then he started teaching people how to build channels, there's a lot to learn for someone who hasn't done channels, right? It's more than just creating the content. In a way, that's the easy part, but how do you do all the other stuff? So all I'm saying is, when you follow somebody, make sure they know what they're talking about. Do they have any experience? Because I see somebody go, "Hey, I just got, a triple on my Misty," and there's nothing wrong with that. Just do yourself a favor. And most of you seasoned guys don't even need that. You've been through that. You know when somebody's blowing smoke or not. So that's all I got to say on that. So I won't belabor all of this stuff. But let's go through a couple of things, and then I'll move right into all these funds. So I always talk about Yomex because I report on a bunch of them. And I showed some of this before, but I updated it. So when you have a lot of money positioned in a fund, how are you protecting, right? How are you hedging? Some of you are going to tell me a whole bunch of different things, and some of you have really thought through it. I've been in Kamir's Discord, which has got a lot of smart, bright people in there. I've got my own Discord. I'm helping people. I'm getting more and more really influential and smart people there. And so it's a process. I shouldn't say forever, for several years, been participating with some ex-professional traders and options guys. And these are some of the best in the world, in my opinion. Some of them do day trading that I really don't do. I just did one recently this week on a 2x Bitcoin, because I figured with this conference going, but you know what? It turned it into a day trade. It made 3.5% and just got out. But anyway, I learned a lot from that group. They won't even take anybody in there that doesn't have some serious chops in investing. And even, like I said, some of the lingo and some of the concepts is even a lot for me because people keep doing new things. So anyway, you all know a lot of this, right? I updated the current price. Here's total return. I'm a big guy on total return. I love SoCal Stevo. He talks a lot. I look at ROI first, right? So there's no right or wrong out there. There's just a lot of people that approach things differently. So I went in and I labeled current yield. This is here nothing more than to show anybody who doesn't know about these high income funds, right, that they're real and you can make money, okay? But what are some of the limitations of these high yield funds? Well, and this is where the growth people, and I debunked this before in the myths, and I won't go through all this again, right? So I've already done this the myths about it's better to own the underlying security. They have 100% of the downside and are limited to 15% of the upside. Okay, again, this is just a reminder, those aren't really true. They probably have 90 or 95% of the downside. It's hard to measure. You'd have to see how long the slide was, because remember, they're writing naked calls every week that they call a covered call strategy against their synthetics that are long. So the synthetics are going down the same as the stock is going down. So, it's the old adage that you buy a security or stock that you're bullish on. Otherwise, the degradation, right, the reduction in value in it is going to get reflected in the NAV reduction in your yield max or your defiance or your curve or something else. And some of these funds have a little, like curve is a little more conservative. You compare most of their yields here, and they're not as high as yield max, but they also don't have much NAV erosion, right? So that trade-off, that's that SoCal Stevo and targeted wealth creation, different way of their looking at it, right? I like ROI, and sometimes I just take on ROI, but I never forget to look at total return. So, in the case of Tesla, I gave you a textbook example of how the income funds can be bad. Well, if you're going down like Tesla, I think it was around 230, 240 at, the exact date at launch. You can go look at it and compare it on a chart. And so it proceeded to go down in general when as low as 100. And then it started up, and then there was periods where it just took off. Well, if you're going down mostly 90 or 95% the same. Well, when you turn and you go up anything over 8 to 10% a week, and you're going to get capped. What does cap means? It means that that naked weekly call that's supposed to produce income turns into a big loss. And I call it driving with a parking brake. One of my down under mates in Australia, because I was using some other analogy, and I said the boat anchor, you're riding your boat and you left the anchor behind, it'd be like a plane with the flaps on. So in this case, it's a parking brake. How fast are you going to go with your parking brake on? Not as fast as without it, that's for sure. So what happens is these funds, when they get capped and big upsides, all that capping, which can get costly, takes away from them being long on the synthetic. So they don't do very well. Sometimes they can only do 20% of the underlying upside. That's why these, people want to bash it, right? Well, what happens when it stays flat, slightly up, or goes down a little bit? Well, guess what? You're making income. They're not making income on the growth if it's just going sideways, but you're making income. So there's, pluses and minuses. So why am I telling you all this? And what about leverage? Because there's a lot of ways for an active investor. First off, you can protect. Secondly, if you're an active investor, then you can make money on that underlying while you're still collecting income, and you might be capped, right? You're not losing money when you're capped. You're just not making what you could be. So you look across here, and what are always the top ones? NVIDIA, right? Especially the kind of run they've had. Coney and Misty. What are Coney and Misty? Well, they're BTC oriented, Michael Saylor with MicroStrategy and Coinbase, right? You got the Ethereum ETFs coming out. So Coinbase is an exchange. I kind of relate it to the general store in the gold rush, right? The gold miners wanted to go make money, and they flood in and they bought food and pans and camping gear and picks and shovels. That's a pretty good business, right? You want to have that kind of business in a gold rush because you don't have to worry about if you struck it rich and found gold or not. So, there's all kinds of things, but those are the three dominant guys. They just stand out, right? So look what poor Tesla did on Tesla, and that down and up, right? Only because it got 24 distributions and average $1.20 because it reverse split, right? It's still got a positive gain, but it makes it hard in these income funds there. So try to choose wisely. Try, and again, stocks are going to have bullish runs. They can, I personally think Tesla is going to go to 570, 550, right, over the next 18 months. But, let's see if I'm right. Not without big moves up and big moves down. We just had their earnings. I'm expecting them to open around where the aftermarket. I don't, again, I play many other methods than just my income. So if you're income only and you want to hedge, let's jump into that. Let me get the next sheet so I can get over this. So how do you do that? All right. So let's talk about crypto as an example, because for a while now we're getting ready to have some 2x bear and bull, but they're not out yet. T-Rex has got some. Defiance is coming out with one. I think they only have a 2x bull, but sorry, on MSTR. But how would I protect Misty today, and how do I protect Misty sometimes? It depends on what Misty's doing. If it's going up, I'm just going to enjoy it when I see it up at a high point, and I think it's vulnerable. I can go out and buy a 2x leverage BTC, something like this. which I just happened to trade the bull one, but here's the bearish one, SBIT. I played actually I used BitU because different companies, and I'm not in it. I was in it for a single day, but I wanted the leverage that, and we may still get it this week, right? There's rumors that Trump is speaking and using the reserve for Bitcoin and for gold. There's something kind of the way they have the strategic petroleum reserve. It's like a strategic dollar reserve by backing it in hard assets. Let's see. It's a political move, but there's something to it as well. And I kind of thought it might just slide this week. We've been up this week, but not a lot. We got the biggest gains last week. Okay, so these are all, and you know what? In all honesty, there's probably Vanguard's got this, BlackRock's got this. There's a YBTC. I can't remember if it's Defiance or if it's Granite. There's tons of these, and there's new Ethereum launches. So this is just a small sampling of these guys. Okay, so look it over by stock. All right, look at this. I tried to give you, here's one for Coney. What if you're in Coney and you see it getting capped and you're like frustrated? I'm reporting on it. There's other YouTubers out there. So you're getting your information, whatever your source is, and you're saying to yourself, God, that fund manager, I wish that, I wish. There's a limitation. They've got a script. They got a prospectus. They generally want to produce income by writing. They say 5 to 15%. I don't know if I've ever seen one in a week that they wrote out 15%. It's possible because it's not going to get them to their target for paying you the amount of money that they want to pay you based on the IV of the underlying. So they write them in closer and then they get run by. So it's just part of what happens. So let's say I'm in Tesla, you know, I'm in Tesla, any of the funds that have an income based on that, right? Curve has it. I think Defiance has it. Obviously, I'm familiar with YieldMax and report on that one. So look at all of these opportunities, bull and bear, right? A 1.25 by Granite. Drexon has a 2x, right? So I made them in red when they're bear and green when they're blue. And I just picked some of the popular, right? The Mag 7, that type of stuff. And then I went into MSTR down here because T-Rex I mentioned, and so is Defiance file for these. Well, guys, do you know what the number one ETF, the most volatile ETF in the world is? I want you to think about that for a second. If you know, put it in the comments, but I'm going to end up telling you. It's a 3x MSTR. I actually thought it was 5x, but I just read again that it's 3x. Maybe it is. But that isn't allowed in the US, right? I'm seeing some 3x, but honestly, I don't know why. I thought that even the SEC wasn't allowing 3x, but I am seeing some. But nobody is doing a 3x in the US. So that 3x by Granite shares in Europe, right? That their CEO is a Brit, very smart guy, launched a lot of those leverage products in Euroland. And he's come over, hit the US market. We're still the world's biggest stock market, and started putting in a lot of funds. And those of you that I know this, a lot of you know about yield boosts. There are like 25 ETFs that are coming, and those are going to be killers. So I tried to I'm going to tell you how to use these in a minute, but I wanted to break them down across categories like crypto, by stock, commodities, indexes, right? So it depends on what you own that you can leverage. So again, things that work, Conal, 2x coin, right? They have a commodities, just a broad range of commodities, Bloomberg Commodities Index, COMB, physical gold. I know those pretty cool. I'm not that cool. It's not that impressed. HIPS, Drop, 50 most disruptive company. It reminds me of a Kathy Wood type. But you see all of these, right? All of the ones that YieldMax have and that other funds have for income. So there's a lot coming in this Yield Boost 25. I list a few of them. Let's look at just commodities. And a lot of these I've used for years. The JNUG, and these used to be 3Xs. Back in the 2000 era, JNUG and DUS were 3X, and then I noticed they suddenly went to 2. So, but I see other 3X. So I'm not sure on the SEC legislation on that. Um, Uranium, right? Defiance has a, I don't know if it pays anything. Usually, when you get into the higher leverage, if it pays, it's very small. Defiance also has oil index, USO oil index. Uh, Granite has a PLTM on platinum. I'm very bullish on platinum going forward. AGQ by ProShares. I hate if you hate K1s, so they have a 2X silver if you want to participate. Yield Boost is supposed to come out with some super leverage one. And then we have our own GDXY. I report on that and talk about that a lot. I'm excited to see New Mining's, one of the largest mining companies in the world, part of the GDX top 10. They report after the market today. Supposedly, I found this out there on Twitter. There's something called STKD. It's supposed to be a combination of gold and BTC futures. It's supposed to be available September 9th from Quantify Funds. I can't find much info. Um, but coming from Granite shares, just in this category here of commodities, gold miners, natural gas, crude oil, silver, gold, VIX, Bitcoin. Okay, there's a ton of Bitcoin. I could probably, there's 50 Bitcoin oriented ETFs. So obviously there's some popularity. How about on the indexes, guys? Again, depending on what you're doing, a lot of you asked me about, you like those weeklies, right? From Roundhill, the QDXTE, and what's the other one? That's the S&P 500 one. Um, QDT, and is it ODT? They're basically 0 days to expiration. So they write a daily, and don't keep it overnight, a daily call against a call that they own. So they're long the index, and then they write a daily call against that, trying to collect income. And at the end of the week, they pay you out. So I just did a report on that. So you can look that up. It's one of my last 2 or 3 videos. Um, but look here, here's a Russell 2000 Yurdi by ProShares, 3X bull, right? And also Roundhill is coming out with RDTE, okay, in their suite of the weekly payers. You can see I drug this down because it's a 1 there. It should be a 2000. The Dow 30, 2X, 2X on the Russell, right? So a lot of different companies offering. Here's a 3X on the S&P. Again, I label them red. These VIX are going to become important. We've had a relatively low VIX, right? And the way you play the VIX is with some of these UVIX, SVIX, UW. I didn't see who actually has UVIX when I look for a fund, but it exists. Um, and obviously, we know about the NASDAQ 100. And Granite is playing off some of these in their yield boost. So again, what's yield boost coming with? Triple Q, SPY, small cap, right? And then what else do I have here on them? Yeah, I talked about those. Not much in Roundhill that's new. All right, guys. So let me take you through. There's a little bit of space here. So how do you use these again? What's the strategy? I used in my thumbnail hedging. Clearly, hedging plays a role. So let's talk about when you say to me, well, Bruce, I wanted to hedge my NVIDIA, but now I got dipped. Okay. But let me give you a scenario when it works and when it doesn't. Okay. So the idea, and I see people in one of the discords, I think in Kamir's discord, they're talking about a sandwich, right? Um, and I kind of thought the same thing. But when I really analyzed it, I could see, and I was reporting on crash for a while. but I'm so bullish on Tesla. Doesn't mean today, tomorrow, the next month. It could go to 12 and I'm still just as bullish on Tesla as I've been. That isn't my main way to play, is through Tesla. I own 1,000 shares. I'm happy to get some income, but it isn't the way I'm going to make most of my money on Tesla. So with these 2x, 3x, even 1x is a way when you don't have an inverse fund. Here's the problem with the inverse fund. Okay. If I draw a line and the line is trending sideways, just down a little bit or up a little bit, then I can go in and I can play Tesla, whoops, and I can play crash, right? So those make sense in that scenario. And it makes with coin and fiat, right? Those are bull, or sorry, Coney and fiat. So Tesla and Crash are bull and bear income funds. But guess what? When you start having a 15% swing in a week or a 10% swing, then the outperformance of this is you know, you're going to underperform. And so, well, but I'm getting income. Yeah, but you're getting an income with NAV reduction. Do you really want that? As long as they're trading within a 1%. I mean, I haven't do the exact calculation, but if it's generally flat with subtle moves up and down, you can own both those funds and collect dividends. But the minute one starts outperforming, then you better go to a ratio of owning them at 80-20 or 70-30 or 60, 50-50 says it better be flat. Because why would you, let's say that this one is going to go up on average 8% over a week or 5% over a week for the next year. Then that means this one's going to go down that much over that same bit. So if you're buying it for complete protection, that's one thing, but it's not the best protection. I'd say go out and when you see the movement in a direction, go get you a 2x. And by the way, I don't recommend you stay in any 2x or 3x fund because they have a hard time maintaining that delta. So it's for trading purposes, right? Let's say you're in Tesla and all of a sudden they announce something and they're going to do another announcement and you say, oh my gosh, Tesla's going to be up 30% over the next 6 weeks, right? And it jumps up 8% one day and you say, oh man, I'm capped, right? I can't get the income out. Well, go over there and buy a 2x Tesla. And if you get a sufficient income over a week or 2 or 3, just sell it, right? And go back and keep your income fund. Because when you're trading in and out of the income fund, you're already getting hit. I know if you're in a tax advantage or not, but you're getting hit, and when you could get long-term gains ultimately in your income fund by holding it. I know there's a whole series of strategy of trading and getting more shares, and I don't disagree with that, but you really have to be a nimble trader, even more of a nimble trader there and an active trader, almost day trading on that, or at least a couple of days, whereas jumping into a 2x or a 3x, you want to do that not because you see a one-day move, you just see something or people that you follow tell you that this is what's happening is very likely in an impulse wave up. Okay, so there's a lot of different ways to play it. The purpose is to educate you on all of the leverage funds because a lot of them have a cheap price, right? And then the next question I got last time I did the hedge was, well, Bruce, how much of that do I buy? Listen, it's work. You got to do the analysis. Buy a small amount, and if you get a dip, see how it works against you. It's a lot of calculation in that. That's why you pay fund managers money, and even they aren't, they're not protecting us. Somebody will say to me, "Well, Bruce, what they don't? You mean they don't really know the sector? They don't know what GDX. They don't know that Newmont's going to report to it, or they're not following it. That they're seeing gold is running and it's doing that because of this." I go, listen. They're option traders. They got their SEC licenses. They got experience. Do you think they're going out there handling 4 funds? One minute it might be Murny and the next is GDXJ or GDXY. And no, they don't try and anticipate the market. They're not fools. I mean, you know, if they know Tesla's going to report or Newmont's going to report, they may take that into consideration, but I actually didn't see that. I saw them earlier last week right all the way out to 8.2, which now you have another big earnings on August 1st in the GDX. So, you know, their first and foremost is to follow their script, to garnish a certain amount of income. And what happens is we see it many times, they just get outrun and then they don't get any income. They have to take all the gain out of the synthetic that we have by being long the stock to buy that back. So it's frustrating. But I would say overall, there's enough times that it just, you know, goes up 1%, goes down 1%, treads water. And they make good income if the IV is still high, because the IV is high because when it does run, it runs a lot or drops a lot at times. So that's kind of what I got for you. Hit me up with questions if you want more specifics, but I wanted you guys to know what all is available out there and how you can hedge. And I also wanted to give you a few of these, right? So don't forget that these aren't the perfect answer, okay? These can help you. So that's three yield maxes, right? So you got Coney and you got Fiat. So you got a bull and you got a bear. You got a bull and you got a bear. You got a bull and you got a bear on the underlying, right? So again, if it's just treading water, unless you say to yourself, NVIDIA's at, you know, 130 and it's going to 160 and you really feel that, then go out and get a 2x NVIDIA. They're all over these funds that I was showing you, right? I don't even know where I have them, but they are here. I can guarantee you that. I know Granite has some. Do I have them in this list? Yeah, here we go. 2x bull NVIDIA, 2x bear NVIDIA, 1.25 bear NVIDIA. So there are other funds. Guys, I'm going to have missed some. There are literally hundreds of funds out there. I just went and gathered some, okay? But there are more, especially in the crypto arena. So that's kind of what I got for you there. Knowing that stuff is out there and how to utilize it is really that. If you're in my Discord, hit me up, ask me a question. There's a lot of smart people in Kamirs, and I got some of the people in Kamirs coming over to mine. Anybody's welcome. We're growing in the Discord. But I think Kamir is known for a great, great Discord. And that's more power to him on that. That's awesome. They're smart people. So these tools can really help you, okay, while you're getting an income. And I have empathy for some of you that really need the income. And then you put the money in and you see, you know, you see Coney and you buy it at 29 and it goes to 18 and you're freaking out, right? Hang in there first off, take a deep breath, shut your computer down, okay? But before next time it's up and you say, oh, Coney is 30, I'm not gonna, you know, it may go to 18 or 20 and you may be right. You know, it might be the time that goes on to 40, but who's to know, right? The charts tell us a lot. But if it is, then own something to protect it. You know, maybe that's the time to go get some fiat. It's one method. But if it ends up being a settle, get out. Don't hold both, you know, because that's not an income direction with big moves. It's going to help you. It's going to hurt you. Okay, guys, I've beat this. But this should be helpful. Again, this is not financial advice. I'm not a financial advisor. Let me know, though, what else I can help you with your questions. Like this, subscribe to the channel, comment. All right, bye for now.